Earlier this week, something big happened, but it didn't generate any headlines. There was no press conference around it. It was just a line item in the Pentagon's daily contract announcements. But what's starting with a $500 million budget could actually turn into much more, and it could be a massive tailwind for the two stocks that I'm going to share with you later in this video, so make sure to stay tuned. Hi, I'm Jacob Wade. I'm a financial coach that helps high-income earners retire early. And if you like timely financial news videos just like this one, hit the thumbs up button below. It lets me know to keep making more videos just like this one. So here's the backstory. The Pentagon just handed a $500 million contract to a defense contractor called AV, ticker symbol AVAV. It's formerly known as AeroVironment. Now, why did they do this? Well, to build a nationwide shield against small drones. Now, AV is no small player. It's actually been around since 1971 and made its name building drones the military actually uses in the field, including the Raven, the Puma, and the Switchblade loitering munition. Now, AV was chosen because of its Titan MS system, an AI-powered platform that fuses radar, RF sensors, and infrared cameras into one system that can detect, track, and even take down small drones. Now, the first $80.5 million of that budget already went out the door this week, headed to Air Force bases, and that's just the beginning. Now, by the way, if the $500 million actually seems like a low number this day and age, consider this. It's just one in what appears to be an accelerating wave of contracts. Back in March, the Army handed a different company, Anduril, a 10-year deal worth $20 billion for its own counter-drone systems. And late last year, AV picked up a separate $874 million deal to sell counter-drone systems to U.S. allies. And industry-wide, more than $29 billion in counter-drone contracts got announced in just the first 3 months of this year. Now, I'm going to break down exactly what's driving all of this in a minute, but first, here's why this matters in the first place. Over the past few years, cheap commercial drones have completely changed the battlefield. A small quadcopter that costs a few $1,000s to build can now do what used to require a fighter jet or a cruise missile. It can do reconnaissance, targeting, even direct attacks. We've watched this play out in Ukraine and this year in the air war between the US and Iran, where American forces were repeatedly put in a position of shooting down cheap Iranian drones with multi-million-dollar Patriot missiles. That math just doesn't work. You can't spend $4 million to stop a $2,000 drone forever. So the Pentagon has been racing to build cheaper, faster ways to detect and knock drones out of the sky. Not just overseas, but here at home, over US military bases and critical infrastructure. So the real subject of this video isn't just what's happening, it's who's benefiting from it. We'll get to that very soon here, but first I want to unpack why this is bigger than just a single contract. And by the way, finding little-known news stories like this and keeping a pulse on the market is exactly what Steve Reitmeister, our editor-in-chief here at WallStreetZen, does and walks through in his free Monday training sessions at 7 p.m. Eastern Time. You could sign up for the next one free right here on the screen on this QR code, or just go to wallstreetzen.com/live. So let's just zoom out for a second here. Industry-wide spending on counter-drone technology is on pace to roughly double by 2030. And remember, these contracts are coming on fast and furious. We've already talked about Anduril's $20 billion contract. So that's the scale of money already moving into this space, and it tells you something important. This $500 million contract isn't the trend. It's an early data point in a much bigger one. So this isn't just AeroVironment, AV, wins a contract. It's the Pentagon is building a whole layered defense network, which means radar to spot a drone, RF sensors to figure out who's flying it, infrared cameras to track it, AI to tie it all together, and something to actually take it down, a jammer or a laser or a missile. So that means this isn't just a one company job, it's a whole supply chain. And when the Pentagon starts writing checks for one piece of it, every other company making radar, sensors, AI vision, or defense networking gear just got a little more credible too. Even the ones that never make the headlines. So when I share with you the two stocks that I think are going to do well here, you're not going to just be betting on a company that won the contract, but you're going to be betting on everyone else that's selling the parts. So let's talk about the opportunities I'm seeing in this niche, but I want to be clear about something. I am not telling you to buy AV stock, even though that's the company that actually won this week's contract. Here's the thing. When I pull up AV's own Zen rating, it earns a letter grade C, which amounts to a hold rating. The grade is a result of a 115-factor fundamental review, which looks at several key areas like growth and momentum and value that could indicate whether the stock is set to outperform going forward. And a C grade isn't bad, but it's middle of the road. And digging into the 7 component grades that shape the overall grade, you'll see it's a weak value and momentum grade. The stock has already run up sharply on blowout earnings and back-to-back contract wins, so a lot of the good news may be already priced into this stock. So that doesn't make AV a bad company, it just means the easy money on the obvious name may already be gone, which is exactly why the supply chain around it can be a smarter place to look. So here are 2 stocks I would look at. Unlike AV, both of these stocks rank in the top 5% of our 4,600 stock database, and they both rank in the top 10% of all stocks tracked, earning an A and a B score, which amounts respectively to a strong buy and a buy recommendation. And real quick, if you're getting any value from this type of video, consider subscribing to the channel. We do this kind of grounded, data-driven research every single week, and I'd love to have you back for the next one. All right, time for the first stock pick. All right, number 1 is going to be Moog Inc., ticker symbol MOG.A. Now, Moog builds the actuation and motion control hardware that steers missiles, aircraft, and unmanned systems, including systems the company explicitly markets for countering drones. As of the week I'm recording, the stock is up over 120% in the past year and nearly 40% in just the last 3 months. So real money is already flowing into this name. Yet signs point to continued growth. Now, here's why it's a prime pick right now. Its growth is accelerating, not slowing down. Moog's earnings grew about 35% over the past year, and that's actually faster than its own 5-year average, meaning the business is speeding up, not coasting on old contracts. And if you zoom out a bit further, you'll see that Moog has grown earnings 176% over the past 10 years. So this is a company with a long track record of actually delivering, not just a story stock riding the headline. And the market is starting to notice. The stock is up over 40% in just the last 3 months, which tells you real money is already positioning ahead of the spending that we just talked about. Yet signs indicate the stock may still have further runway. While analyst coverage is limited here, it is bullish, with the lone analyst issuing a strong buy recommendation. And as noted, Moog carries an A rating or a strong buy recommendation from our quant system. Digging into the component grades themselves, financials, safety, and sentiment all land at a solid B, and momentum tops the list at an A. That's a healthy mix. A company with strong fundamentals and a market that's paying attention, topped off by the strongest kind of signal you can have, price and earnings momentum that's still building, not fading. Now, less strong, but still respectable, is value and growth that sit at a C. So you're paying for quality here, not picking it up cheap. But even with that in mind, this is a stock with real momentum, an accelerating growth story, and a strong buy rating to back it up. A compelling setup when a trend like counter-drone spending is just getting started. Now, by the way, if you like stock picks like this, then I once again remind you to check out WallStreetZen's no-cost live training sessions. You can join our editor-in-chief, Steve Reitmeister, on Mondays at 7 p.m. Eastern Time. He doesn't just talk about what he's buying, but how he's actually finding stocks so you can do the same in the days ahead. He also shares his trade of the week, combining the best of the Zen Ratings with his 40-plus years of investing experience. So if you're liking this type of content, I strongly recommend just pause the video for a minute and register for free at wallstreetzen.com/live, or you could find the link in the description below, or even just scan the QR code screen right here and sign up. All right, stock number 2 here is Keysight Technologies, ticker symbol KEYS. Now, Keysight builds the test equipment that defense contractors use to validate radar and electronic warfare systems before those systems ever reach the battlefield. The picks and shovels play in this story, essentially. So it really doesn't matter who wins the next counter-drone contract. There's a strong chance that Keysight's gear is going to be in the test loop either way. And as of the week I'm recording this, the stock is up roughly 90% over the past year. But don't let that scare you. Unlike a lot of names that ran hot and then stalled, this one is still climbing. Now, what makes this one worth a closer look is the pace of the underlying business. Keysight's earnings grew about 43% over the past year, well ahead of its own 5-year average. This isn't a company cruising on momentum alone. The numbers are actually catching up to the stock. And it's not a recent phenomenon. Keysight has grown earnings nearly 109% over the past decade. So there's a real substantial track record behind this, not just one hot quarter. And Wall Street believes that Key's hot trajectory could continue. 10 analysts cover Keysight, with 7 of them recommending it as a strong buy, and with the maximum price target suggesting the stock could see another 40% additional upside in the coming year alone. Now, that street high comes from Mehdi Hosseina of Susquehanna, a top 1% ranked analyst based on stock picking track record. And our own system lines up with that call. Keysight carries a Zen rating of a B, which is a buy recommendation. But truthfully, it's more like a B+. Our A rating encompasses stocks ranked in the top 5% and above, and this stock is in the 94.9th percentile, so it's just a hair shy of earning an A rating. Now, these ratings are updated daily, so you could see for yourself if it gets upgraded to an A rating by just going to WallStreetZen.com and entering the ticker symbol. Now, as for the component grades, sentiment comes in at a solid B, with financials, AI, and momentum all landing at the top with an A grade. And just a quick word on that AI grade, because people always ask about it. It's not measuring how much artificial intelligence the company sells. It's actually our system spotting the kind of price and trading patterns that have historically shown up before the stock outperforms. So a top 1% ranking in this area is actually significant. Now, overall, this combination of grades is compelling, suggesting a company that's fundamentally sound, technologically sharp, and already has the market's attention, all backed by momentum that's still building rather than fading away. Now, the softer spots here in the component grades are going to be value, safety, and growth. They all sit at a C. Once again, it's not bad, but it's not exceptional. This tracks with the fact that the stock isn't really a value stock. The idea here is you're buying a quality stock, but you might not be getting it at a big discount. So if you put this all together, Keysight looks like a company hitting its stride in the exact moment that the trend is starting to heat up. It has strong numbers, a market that's still buying in, and Wall Street is largely in agreement here. So there you have it. That's the 2 picks based on what is happening. I would love to hear from you on this. What do you think about the accelerated drone spending? Do you think it's going to be a real boon for the stocks that I'm talking about, or is there another defense stock that you're watching in this space? I would love to hear from you. Drop a comment below. And if you like this video, then you're definitely going to enjoy hearing about another big government spending contract in recent memory on quantum computing. Check out the video right here where we break everything down.